Hey traders, today is Thursday, January 22nd. I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the dollar CAD. It's been a tumultuous couple of months. You got a 3.5% drop off of those November highs, you had a 2.1% rally off the December low, and now we're almost 1% off this month's high. And the focus is on this pullback. That rally saw a 9-day stretch off the December low right into the median line of this ascending structure. You had the 52-week moving average there, and we've turned lower since. So the focus is on this pullback off of the median line within the broader structure. Here's what the daily chart looks like. Here's the extent of the decline just over the last 4 days. We're prompted now, or we're poised to mark a fourth consecutive day down. Yesterday, we rebounded off that 50% retracement, but we failed to mount the 200-day moving average. Momentum is still sneaking back below 50. The threat is still for a little bit deeper of a pullback here. There are two main key levels that are critical for dollar CAD. The 618 of the rally off of that December low gives you 37.52. Just a bit lower, 37.22, 37.27. You're looking at the objective yearly open for January. You're looking at the August lows. You're looking at the September lows. Both of those levels have the potential to prompt a little bit more of a reversal to register a low or an exhaustion low near that level. So that's the risk. Bearish invalidation, here's what the 4-hour chart looks like, is up at the 618 retracement of this near-term decline, converges on this pitchfork. It's just extending off of the highs for the month. It's just a copy of just basic trendline support there with a 3-point touch. So it's a confirmed slope that converges on that 618 basically into the close of this week, into the open of next week. 38.74 initial resistance right ahead of that. Just that last week's low comes in at 38.55. You can see that 200-day moving average has been a decent pivot and governed the rally that we saw yesterday on the back of the Trump remarks at Davos. You did see the dollar take a little bit of a breather, but that rally has already fizzled out right into that 200-day moving average. Look, if we're heading lower on this stretch, rallies would need to be limited to 38.74. If we break below that 37.80 level, the lows for the week, it would mark resumption of this near-term downtrend. Again, 37.52, 37.24, 37.27 key zones. We'd be on alert for potential exhaustion, a potential low to register. So the structure here on the near-term chart, a little bit cleaner. Heading into the close of the week, we do get PCE figures today. It'll probably be out by the time this is published. The core personal consumption expenditure, the Fed's preferred inflationary gauge. They're a bit dated. These are the numbers from November. And then heading into next week, obviously, you have the BOC interest rate decision. They're expected to hold rates at 2.25%. And also the Fed rate decision, no changes expected there at 3.5 to 3.75. So there is some event risk on tap heading into next week that could shake things up and give us some clarity on this trade. We'll try to keep you updated as always on MB Forex on X. Till then, best of luck trading. We'll see you guys next week. Cheers.